Hi guys, and welcome back to the channel. Thank you for joining me once again. It's great to see you, of course. Today's video, we're going to be talking about what we are calling the Google of blockchain. It is, of course, the Graph. Now, when I heard the Graph, I assumed that it was some kind of movie title. Coming soon to a cinema near you, CryptoPig Productions presents the Graph. They didn't go ahead and make that movie because I'm afraid it didn't have any plot. Now, I'm sure most of you have been completely scared away by my absolutely terrible dad type jokes, but if you're still with me, please do me a massive favor, like this video, subscribe to the channel, and share it with your friends and colleagues, because YouTube are actively suppressing crypto content on the space. They just want to destroy us. They want to destroy all of us, so if you can share it, get the word out there, it's really, really helpful to do that. So thank you in advance for that, guys. In today's video, we're going to be looking at GRT, the Graph. It's been touted as the Google of blockchains. We're going to talk about what it is, how it works, and more importantly, I'm going to be giving you my amazing, probably insane, and I always say insane, but it's maybe not that insane, let's go with it anyway, my insane moonshot price prediction for GRT this year. Now, this project, when it was launched, almost immediately got listed on Coinbase Pro. It has caused the price to soar, and as we've seen with other projects, that can sometimes be a bad thing, but I'm going to tell you what I'm expecting from it moving forward. Now, like many projects, this one isn't free of controversies, and there are currently a few stories out there that sound a lot like FUD that we're going to talk about and explore in the video. There's a dispute apparently between delegators and indexers. I'll explain what they all are in the video, and then I'm going to tell you why I am still bullish despite all of the concerns that I have seen. But first, a warning. Please remember, none of this video is financial advice. I am not giving you financial advice. This is just my opinion on the project from my experience as a trader and also from my research. Now, if you want to invest in anything, please make sure you do your own research. It's really important you do that. Please use my video as a starting point, but make sure that you look into this project in depth yourself before you go handing over your hard-earned cash. Now, back to the video. GRT is an ERC20 token that fuels the Graph. It is used as a reward incentive for all participants in the network. Now, the Graph itself, though, is something called an indexing protocol. Now, the best way to describe this is to think of it like a book. Now, if you wanted to find a certain bit of text inside a book, or even a certain word, and every time it occurs, you could, of course, open that book up and go page by page looking for that word, and it could take you a very, very long time. Or you could create an index, and in that index you could find the word you want and then skip straight away to the pages where that word appears. That's basically what the Graph does, but for blockchains. There is an equivalent in databases, which is called database indexing. However, with blockchains, actually indexing that data can be incredibly difficult, time-consuming, and expensive for developers. There are blockchain explorers that can help you to find data from a blockchain. However, those explorers are centralized and controlled, and you have to trust the provider of that explorer. The Graph, however, is an indexing protocol that actually queries all of those blockchains, but does it in a decentralized way. The tool it uses to do this is called an API, Application Programming Interfaces. They call them on the Graph, they call these things subgraphs. These subgraphs act like plugins that make it super quick and easy for developers to be able to actually query data from different blockchains, and there's over 7,000 of them available on the Graph. Soon they'll be adding Polkadot to those graphs, but right now they include Aave, Balancer, Uniswap, and more. So how does the Graph actually work? So there are three main components to the Graph network, and it actually works on a three-tiered level system of complexity. So you can actually have the most advanced part of the network secured by people with a lot of technical knowledge, and then even people who are laymen with no actual technical expertise at all able to take part as well. So those three components are indexers, curators, and delegators. So indexers are node operators on the Graph network. These are the people with the most technical knowledge, and they take on the sort of most technical part in securing the network. They actually run the indexer nodes, which scour through blockchains looking to index all that information and data. The indexers process all of the queries that come through them via the subgraph APIs. Indexers actually use something called proof of index, POI, as a way to verify and prove that the indexing has been done correctly. To do this, they actually have to stake GRT on the network, as well as actually run a node that processes the queries that are coming in from all the developers out there. And there are consequences as well if they're to mess up or act maliciously. In fact, if they behave badly and do something wrong, their staked GRT can actually be slashed. And is it actually worth it? Well, yes, because those indexers are actually rewarded with query fees and indexer rewards. So that reward is in more GRT, and currently there is a lockup period of 28 days. So once you've actually got your reward, it is locked up for 28 days to stop you being able to dump it on the market. Now, the second part of the network is the Curators. So Curators have a semi-technical role in the network. In fact, it's a role that can actually be performed by anybody with a sort of an enthusiast level understanding of cryptocurrencies and the market itself. The Curator's role is really interesting because what they have to do is they have to basically predict which subgraphs they expect to be utilized the most. So they've got to actually look at the quality of those subgraphs, and then they have to predict which ones they think are going to be the ones that the market is going to make most use of. The curator then stakes GRT to a bonding curve on the subgraph that they've chosen. Doing this creates something called a curation signal, which is a signal sent out to the indexers so that they know which networks they're most likely going to need to index ahead of any queries that come through. So as a reward for doing this, curators are actually given something called a curation share. So they'll put their GRT in on this bonding curve, and in return they'll receive these curation shares. Once a curator wants to actually cash out, all they have to do is burn their curation shares, and they'll receive their GRT back plus a share of any query fees that were actually gained on that subgraph. Now, the final contributor to the network are called Delegators. Now, this is the most simple one to actually take part in. You don't need to have any knowledge of crypto or any technical knowledge anyway, so you can take part without actually needing any technical knowledge. Effectively, like staking pools, a delegator will actually allocate their stake of GRT to an indexer, and they can choose that indexer based on performance history. Delegators then receive a reward or a small portion of the indexer's reward and query fees, and of course help secure the network by doing so. Now, this does lead to some of the FUD that's out there about GRT, and some of it is a legitimate concern. So we're going to talk about those now before we move forward. Basically, at the moment, there is a dispute, or at least it looks like there's a dispute between delegators and indexers over when the lockup period should end for their GRT tokens that they receive as a reward. Currently, it's 28 days, but a proposal was put forward to allow indexers to actually receive and be able to sell their GRT that they've earned as soon as they've received it. Now, if this does happen, it could actually have some impact on the overall price for GRT, although I've looked at the actual volumes that GRT is doing, and volume is still up at $230 million per day. So looking at those volumes, even if they were able to sell their GRT as soon as they made it, I don't think it's going to have that big of an impact on the market. Now, one concern that I do have and agree with some people out there in the space is that they haven't begun the subgraph migration yet. Now, they did their mainnet launch obviously in December, but they haven't actually begun to migrate any of their bigger subgraphs over to that mainnet. They're still basically hosted services. So that is a slight concern, but I do have to say, I mean, it's one of the risks we obviously see with these projects. A lot of projects, they're building and building as they go, right? So there is an element of it where we have to go, all right, they have got the mainnet. They are going to and should be moving those subgraphs over to the mainnet this year. That's been promised. We can't expect everything to be done straight away. There is a roadmap. And I mean, if we took that attitude with every project, would we have invested in Cardano ADA? No. Would we have invested in a lot of projects? Probably not, because most of them started off with a very more centralized approach and then eventually worked their way up into their decentralized true form. So, I mean, yeah, there is, of course, a concern there, but I don't think that we need to be worried about it right now. Because if we took that attitude with every project, we'd have never invested in any of the good ones out there. The other thing to point out as well on that subject is that there are actually thousands of community-driven subgraphs which are actually decentralized and running on the mainnet. So the tech works. It's just a case of getting them to move over the subgraphs from hosted services to the mainnet itself. The final concern I have heard of, and again, one to be kind of wary of, is that apparently SAFT agreements that were signed last year in July are apparently going to be expiring this summer. That means that the people who were VC backers into Graph, they will be able to actually cash out their tokens, which they would have got at quite a hefty discount. Now, I couldn't find any information about when this is apparently going to happen to back up the claim. Like I said, this one sounds like it is FUD because most SAFTs have conditions tied to them about how much can be sold, how soon and when. So I do think that this one is one that I'm not particularly worried about right now. I've obviously seen enough SAFTs that I know that the majority of them will have things in there like, clauses that say you can only sell a certain percentage per month after mainnet launch. So I do think that that's not going to be a big problem right now. And anyway, looking at it price-wise right now, we've already seen a 50% retracement on its all-time high. So I feel like this is a good entry point for myself. You, of course, may have a different risk appetite, so please do take all of those things into consideration before investing in any project. Like I say, I always want to give you the good and the bad. That's the FUD that's out there. And some of it, of course, is legitimate. But to be honest with you, I think that the price right now for Graph and the potential in this technology, for me, I'm willing to accept that kind of level of risk. So with all that FUD dealt with and discussed, let's talk about the reasons why I'm super bullish about the Graph. If there's one thing that Chainlink taught us, it's that a project with real utilization can basically defy the markets. Think back to 2018. The market was looking terrible for Bitcoin, and then Chainlink came along, and even though everything else was dumping like crazy, Chainlink was making gains and continued to do so all the way through a bear market. Why? Because it had real world utilization. It was being used by everybody. GRT, Graph, it's going to do the same. It's got staying power. Why? Well, this month alone, they had 13 billion queries go through the Graph. That is a massive increase in query traffic compared to last year. And on top of that, it shows developers are using it. It's got real utilization. The dev team there are adding graphs all the time. In fact, any dev can add their own subgraphs in the community subgraph section, but the biggest ones are being added all the time, and Polkadot, one of my favorites, is about to come onto the Graph as well. DeFi projects need to leverage the tech that the Graph has. And even though it feels like DeFi has had its kind of craze moment, I think that there's still a lot to come from the DeFi space. It's still in its infancy. So again, another really big use case for the Graph, one that's going to drive the Graph's utilization and its price up. So I do really think that there's still so much to look forward to come from the Graph. So what about my crazy price prediction for the Graph then? Where has that come from? What am I expecting? The price of GRT has been accumulating for over a month now. Normally projects that get super hyped at the beginning and listed really early on exchanges like Coinbase, they do have a tendency to pull back hard. And of course, that happened with Algorand, which is another project which got listed very early on. And then as a result of that, the hype died down and massive pullback occurred. But that was during a bear market, and Algorand is now making incredible gains. GRT, on the other hand, had an early listing on Coinbase Pro and saw that massive correction as a result of it being overhyped. Well, now we are in a bull market, so I do think that we're going to see that recovery for GRT a lot faster than we would have done with Algorand. GRT right now does look like it's about to break out. The volume has been decreasing, the price is looking ready to break out, and I think that it could definitely 10x this year. And I'm thinking in the short term, and I mean literally within the next few weeks, we're going to see GRT up at about $3.50. And if the current user base for Graph keeps on growing the way it is, with that exponential growth in query data being pulled from the Graph, I think that a $15 GRT is very much on the cards for the end of this year. So with all of those predictions, with those thoughts about how it works, and of course the risks associated with it, I have obviously made an aggressive buy at this price point right now for the Graph. It may not play out in my favor. Most people might wait for an actual breakout, but I feel very, very bullish on this project. I've gone in with an aggressive trade on it. Hopefully it pays off. But guys, if you did enjoy this video, please do make sure that you like this video, subscribe to the channel, of course, hit that notification bell to be kept up to date with all of the latest videos, and make sure that you get told when these videos come out. A lot of it is very much time sensitive, so you want to make sure that you're seeing it as I put these out. For projects you'd like me to talk about in the future, please do comment in the section down below. Let me know your thoughts on GRT. All right, guys, hopefully you found that helpful, like I said, and enjoyed it. My jokes hopefully didn't put you off too much, and I will see you all in the next one. Bye!